Well, as promised, let's get chatting with the management of PrataapSnacks. We had seen a big, move in the stock in yesterday's trading session. Some profits being taken today, but no taking away from the sharp expansion that we saw in their gross margins due to lower palm oil and packaging prices. The company reported their highest ever quarterly EBITDA. We have Amit Kumat, who's the managing director and CEO of the company, joining in. Thanks a lot, Amit, for joining in. Hope you're snacking well. Your margins expanded, your gross margins did extremely well, but the revenue growth was just around 1.5%. I'm given to understand that it was largely volume-led. And what can you guide for in terms of a top-line growth going forward? How are demand situations right now?
I think if you see, there is a lot of stress in the rural market in last 2 quarters. That has improved considerably. So H1, I think we would be having a positive growth of almost 5 to 7%. But H2, we look for a real positive growth of more than 15%.
Oh. So for the year, you will see what, 8 to 12% growth, 8 to 10%? Is that possible?
About 10%, definitely about 10%. That's what we are targeting.
Oh, lovely. All right. Hi, Amit. Good morning and thanks so much for joining in. Your shareholders will be happy, right? There is some gross margin expansion and also margins are at around 8.5%. That's been the worrying aspect for the last few years. So give us a couple of numbers. What is the sustainable gross margin, if you could tell us that? How much of this gain will be plowed back into advertising cost? And putting all this together, what should your EBITDA margin look like? Can you get to 10%?
I think we are targeting to get to close to 9% by end of the year. And definitely next year, we are targeting 10%. Anything above that, what we would like to put in advertising and branding. And hopefully, probably in Q3 and Q4, we can do some branding for our brands. Advertisement kind of advertisement for our branding.
Give us a number. How much do you normally spend on advertising and branding?
So we do around 15 to 20 crores on the yearly basis. But we look forward to spend another 20-25 crores on just pure branding. The advertisement, what we are currently doing is in our ring product. We advertise the toy, what we are giving a freebie, what we give with the packet. So we have not done any branding after the IPO. What we did with Salman Khan probably 3 years back. Definitely intend to do with someone this year.
All right, we'll be interested to know who that someone is. Just wanted to know, your distribution. I mean, you have to obviously increase your sales by increasing distribution and penetration as well. How many touch points are you at right now in how many states? And what's your plan for expanding distribution?
So we are currently on 2.1 million outlets. We intend to go to probably 2.5 million outlets within the next 1 year. And we are currently available in most of the states in the country, except 3-4 states.
And what is your market share at right now? I remember it being around mid-single digits, and you were targeting to double that as well.
So it is currently at 4 to 5%, and hopefully we can double it probably next 3 years' time.
All right, Amit, you're doing quite well. You're talking about margins in the high single digits and maybe going to double digit in the next year as well. That's 10%. When do you get to revenues of 500 crores?
I think from the next quarter, we should be close to 500 crores.
Next one, this is the quarter 2 that we are in.
From the quarter 3, we are targeting 500 crores.
Oh, all right.
All right, 500 crore per quarter from quarter 3 itself. And the product mix, I mean, everyone keeps talking about, Pratap as being the company that sells chips. But increasingly, you are getting more share coming in from Namkeen and also some share coming in from the sweets as well. Could you break up your product mix right now and tell us where this is likely to change going forward? What are the ones that give you higher margins?
So Namkeen is basically currently on 15% of the revenue, but most of the sales is coming from the extruded snacks, which is close to 40%. We feel that the Namkeen business should grow from 15% to 20-22% this year only, by end of the year. And definitely everything else has to grow. We have to cross 500 crores from next quarter.
Okay, all right. Amit, final question then before we let you go. You had committed some money to the PLI scheme, right? Could you tell us what is the Capex out there and what will be the revenue potential as well from that Capex?
So we have to spend around 105 crores, in which we have already spent around 60 crore rupees. We are putting up a facility in Jammu and a small facility in Rajkot. And I think that overall, after putting all this Capex, we can go to the revenue of 2,500 crores on the yearly basis.
Right. And, in terms of sales coming in from different channels, can you tell us if you have any exposure to quick commerce, modern trade? How do those channels pan out for you right now? And I'm saying this just because I saw Blinkit's numbers. They were showing strong growth. Are you present on any of these channels?
I think we have very small presence in the modern trade and definitely very small presence in the quick commerce. currently the total sales in quick commerce and modern trade would be less than 1% of our total revenue. We definitely intend to probably trying to get there with some different kind of offering, because the consumer base is different little bit there than the normal GT trade.
Is there any competitive intensity in the marketplace that you see? Because I mean, yes, yours is a strong brand, but you haven't advertised in since your IPO, and now there are so many other players, some listed players as well, entering the Namkeen space, entering a lot of the chip space, a lot of MNCs. How's competitive intensity? Will that keep a lid on your margins?
I think it is definitely very competitive. When the raw material prices went down in last 1 year, then a lot of the smaller players will also come into the picture. So that has definitely been very, very competitive. It is going to be competitive, but you have to give better offering to the consumer, more value and in terms of probably quality or quantity. That's the only way to sustain in the market. And I think we have all the ingredients to give good quality and quantity to the consumers.
Wish you well on that. Amit, thanks so much for stopping by and giving us all those details. You're appearing like the second half of this year will be far stronger. We'll keep tracking that, and we look forward to having a chat with you in the months to come. Well, Manglam, I think it's time for a snack.
It's time for a quick snack. We'll take a crunchy break, and on the other side, you'll have the team of Trading Hour waiting for you, taking the market action ahead.